Hello and welcome to another update video on gold. We want to see how the gold chart performed here over the last 24 hours since the last video. Really at the moment it's very choppy here, price action that we see here. I'm going to zoom in a minute. For those of you who are new to the channel, let me tell you that I treat this move currently on the chart as an A, B, C structure. And the C wave to the downside is a 5-wave decline. Wave 1, then we've got wave 2, wave 3, wave 4, wave 5. That is our perspective here. We're looking for a 5-wave decline. However, after that initial 5-wave decline that we saw into the Tuesday low of this week, the market formed the expected bounce. That's what we wanted to see this week. That's how we started the week. The idea was end of last week that ideally we would get a 5th wave down this week. That happened, but that is probably only wave 1 of wave C to the downside. And we said after wave 1, we'd like to see the wave 2 bounce. And the wave 2 is a counter trend move. So even if you're not so familiar with Elliott Wave, that's perfectly fine. Just important to understand the wave 1 is in this case the trending move because it is a 5-wave move. And so after 5 waves, we typically expect a counter trend move. So I don't want to say it was obvious, but it was the probable move for this week to get that wave 2 bounce into the resistance area. Now, it is not as easy as that because, we have moved into the resistance area, but normally when a wave 2 is complete, then what we would expect is the 3rd wave to the downside, to be honest, to be fairly aggressive. And I really don't see anything aggressive to the downside here. In fact, it's actually still holding that pivot that I mentioned yesterday, this support zone, which is between $4,026 and $4,065. I'm going to remove it now. I'm not sure how relevant it is. I mean, the market reacted to it, and clearly it's doing something, but I don't think we need it anymore. The thing is, the market formed that bounce, but then moved down also in something that really looks corrective in nature. So I treat it as a possible B wave low, okay? My view is, and both are possible pathways, right? But because I haven't seen any impulse to the downside in a possible 3rd wave, it seems more probable that the wave 2 is still unfolding because a 3-wave move, and we had a 3-wave move up, might not just be the wave 2, it could also just be the A wave of a larger wave 2. And that now it's obviously forming here possibly a complex B wave pullback, which landed in that support area I showed you. And then from there, a C wave to the upside could follow. But also here, the C wave doesn't really look very impulsive. So it will be interesting to see how the new week is starting then. I treat this move up as a possible 5-wave move, I'd say. We have some overlaps there, but if this C wave is moving, okay, if this C wave to the upside is unfolding, then this might be the wave 1. This might be the wave 2, and we could grind higher like this in a sequence of 5 waves, because that could be a C wave, possibly as an impulse then, in which wave 1 is the leading diagonal pattern. You see the 5 waves, it's just not an impulse, it's possibly a diagonal pattern. 5 waves up with overlapping structures. The pullback here appears to be a 3-wave move down. And this is the support zone we're watching. This is the support zone, not necessarily for next week, because it's likely going to be relevant only when the market opens. And then we either get a bounce, or if we get a breakthrough, then that would again shift the probabilities towards a 3rd wave to the downside. But I really have a hard time to come up here with a convincing structure to the downside that there are certainly ways how this could play out, but because the 3rd wave is normally the most aggressive one, and I don't really see anything like that, it rather looks like a 3-wave corrective pullback. So I keep the door open for higher prices, at least in the short term, in wave C of 2. Now, the very last thing I wanted to mention here is we can take the length of the A wave. Let's do that. So we take the length of that A wave, and then we go to the low of the B wave, and that gives us, let's say, an ideal Fibonacci extension target, which is relevant in case this was the B wave low. So as long as we're holding this micro support area, next week the market should grind towards $4,154. This is the very first target for the C wave, and it is, funny enough, also an overlap. It's overlapping with the 61.8 retracement level, which is also a very, very important Fibonacci retracement level. So that's how I would see the market right now. Obviously, markets are fluid, things can change. So if we break below 4,035, the context wouldn't change, but it might just need a new microstructure, which means, well, not really a new one. It would just mean we'll likely come down in the third wave, right? So overall, the pressure appears downward as long as we stay below the Thursday high of last week, which formed here around $4,251. So this is likely a top. And so pressure appears downward. Let's see if the market can go a little higher early next week. Before we wrap up the video, I also wanted to take a quick glance at the bigger picture, the gold long-term chart, just for anybody who's made it to this part of the video, just so that you can kind of visualize on the larger time frame where we likely are. Because the idea is, look, we have a fourth wave pullback here. And in the orange scenario, this could be a little larger than in the white scenario. In the white scenario, we have a smaller degree wave 4. In the orange count, it's a slightly larger one. And one more high. I would still like to see one more high. I haven't got enough evidence to say that a major top has formed. I treat this current pullback as an internal wave 4 just as an internal wave 4, basically, within a still unfolding upside impulse. But we're probably in the very late stages. Yeah, probably in the very late stages of that larger degree of that long-term upside impulse. So that's the update on gold. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Yeah, and if you're interested in additional updates, check out our stocks membership where we cover gold and silver as additional bonus. And if you're wondering, where you can actually trade gold futures, we've partnered with XTB. They are a globally regulated broker. They operate in most regions around the world. And they do offer gold CFDs. You can also it depends on where you're located, but you can still receive a free share if you sign up and you fulfill the conditions. This year is particularly for the UK, but it depends on where you're located. And they do offer gold CFDs. So I'm here now on the X-Station dashboard. And for example, I know some of you are interested in platinum and palladium as well. They also have CFDs for these. Again, make sure that you familiarize yourself with the risk, but CFDs closely mirror the gold futures chart that I am tracking here in the video, in the analysis. So, if you'd like to support this channel and our project, where we post daily market updates on gold, silver, and some additional stocks even, you'll find the partner link pinned below. If you sign up through that link, you are directly supporting what we're building here every single day. I wish you a great day. Thanks so much. Bye-bye.